Starting with Altria, lower after a Wall Street Journal report that the FDA will order Juul to take its e-cigs off the U.S. market. Those shares down 9%. Roku up 4.5% and up 13 days on a couple of positive analyst comments, and the CEO saying its ad business is strong. Kraft Heinz higher by 2% today after BMO upgraded the stock and sees 25% upside from here. Let's bring in David Traynor. He's the CEO of New Constructs, an investment research firm. And David, Altria, what would you do with the stock?
We think that's a buy. Look, this has been a major free cash flow generator, 10% plus free cash flow yield consistently over the years. And the stock price is really beat down. I mean, it implies the profits will permanently decline by 50%. So risk reward is really good. And when it comes to competitive advantage, no one or very few companies in the history of the world have been better at branding, marketing, and distributing their products than Altria.
Let's move on to another category, another stock, Roku.
Yeah, Roku, I mean, what's there? I mean, is it really that differentiated a product? And look, they've never made any money cash flow wise. I don't know that they ever will, especially if they couldn't do it during the pandemic. And yet the stock price implies that profits will increase by over 300%. So sort of the opposite of Altria. Never made money. With the stock price, it's going to imply cash flows or profits will dramatically expand. And so we think risk reward is really bad there. Recommend selling.
All right. So one buy, one sell. What about Kraft Heinz?
I'm in the middle ground there, right? This has been a profitable business, but profits are in decline. And it's relatively undifferentiated. It's commoditized for the most part. There's not a lot of growth or innovation. We think recession and or inflationary risks are going to really be a big headwind for this business. Its valuation isn't very steep, but there's not a lot to like or a lot to hate here with Kraft.
Is Kraft Heinz, is there a case to be made by investment bankers that you could bundle parts of Kraft Heinz and divest parts the way Kellogg is going?
I mean, absolutely. Look, but Kraft Heinz up to this point has kind of been an M&A nightmare, right? I mean, they've had some of the biggest write-downs in the history of acquisitions, right. And so they don't have a great track record in terms of capital allocation. Unwinding those bad acquisitions doesn't necessarily make bad investments good, but it puts less capital in the hands of certain folks who've not had a good track record. That could be accretive, but it doesn't create value where there isn't any to begin with. Even if you divide the pie into smaller pieces, it doesn't change the size of the pie.
Yeah, and as you say, it doesn't make bad moves good moves.
A parting thought, David, on the market?
We think there's a lot more pain to come. There are plenty of stocks that are still dramatically overvalued. Clearly, we've not seen capitulation when certain stocks, like whether it's Coinbase or Robinhood or Peloton or Tesla, are still trading at valuations that imply extraordinary cash flow growth. And so we think things have come in a lot, and that's a good sign. But there's a lot more, I think, culling of the herd that needs to happen before this market hits a bottom.
All right, David Traynor of New Constructs.